all, I am CA Balram Uchidi. As part of our series on corporate tax return filing, in this episode we are going to talk more about transfer pricing and then related compliances. It is almost important for us to look at the transactions that you have with related parties, also the payments that you make to your connected persons, and make sure that those transactions are at arm's length and the payments to connected persons are at market value. So to talk more about this, so we have my partner, CA Naveen Kabra. So he's going to discuss more about the transfer pricing and related compliances. Yeah, hello Naveen.
Hi Balram. Hello.
Yeah. So as we know, the transfer pricing is going to be one of the important area to look at
Yeah.
for all the businesses, especially the businesses which have got their transactions with related parties, as well as payments that they make to connected persons.
Right.
Right. So what are the requirements as per UAE Corporate Tax Law with respect to these transactions and arrangements?
Right. Well, in the around 70 articles which the corporate tax regulation has, roughly 70 to 75, there are only 4 articles which talks about transfer pricing. So it's a very simple subject.
Yeah.
Don't even worry about it. I'm just joking.
Yeah, I know.
I think it's extremely complex. It is one of the technical subject. It is something which generally taxpayers, generally businesses do not really understand very well. And what happens is that creates an opportunity, but also at the same time that creates a big threat for you to make understand the other person. So transfer pricing in a very generic way or in a very layman's term is essentially nothing but when you are dealing in business with your related party or your connected person. This is a new concept which the UAE Corporate Tax Regulations has brought in, but generally we talk about related parties. So when you deal with your related party, you have to do a transaction at a value which is at arm's length. What does it mean? It means that you have to deal with the related party in the exact same manner as if on the other side it was not a related party but it was a third party. So the dealing has to be at arm's length. That's called arm's length. So coming back to the regulation, now this is the concept of transfer pricing. So the price at which you transact is a transfer price. Now, coming back to the regulation, there are only 4 articles which talks predominantly about transfer pricing, but they are, in my view, giving a holistic view, which is pretty much as per the OECD standards, and they give a clear guidance as to what needs to be treated and how it needs to be treated. So Article 34, it basically talks about arm's length principle or arm's length price, as we say. It's called arm's length principle, ALP. For our discussion, we'll use the word ALP.
Yeah.
So this arm's length principle, as I was discussing, is predominantly or on a very high level, essentially a price at which you would have dealt with a third party rather than your related party. So you have to ensure. Now there are various ways. There are 6 methods which have been defined under the regulation, again going back as per the OECD standards, and globally this phenomena is followed by most of the countries and most of the OECD compliant countries. Under the 6 methods, you can choose the very well or best opted method which is optimum for your business type, and then you derive the prices, and based on those prices then you transact. This is essentially Article 34 talking about arm's length principle.
Yeah.
Article 35 talks about related party. So in that, the related party definition has been clearly spelled out. Now it is pretty much in the simile to the International Accounting Standard or IFRS, where a definition of the related party is mentioned. So it is pretty much the same. So in summary, if I would want to say, let's say shareholders, they become related party, or the companies which are under your direct control, which is your subsidiary, becomes a related party. So, something like that. So this is the pretty much related party definition. Now, when it comes to the related party definition from the individual perspective, from a corporate perspective, it is mainly the subsidiaries and the associated companies of those subsidiaries. And from an individual perspective, when it comes to the related party thing, it is more, I would say, rigorous, or more dealt in a very deep manner. It goes up to the fourth level of kinship or relation. What does it mean? It means if you are an individual here, 4 generations up and 4 generations down will be covered under the related party for an individual. It means, let's say if I am the owner of the company as a shareholder, my son and my grandson and my great grandson also will become a related party for me to do any transaction. So for individuals, in my view, the depth of definition is very wide, and one should have to be very, very clear with whom they are transacting. If they are transacting with one of those related party, as per the definition, the arm's length principle has to be followed as per those 6 principles whereby you can derive the arm's length price or transfer price.
Right.
Article 36 talks about connected person. This is a unique phenomena which is not available in most of the tax jurisdictions. I'll tell you the reason why. But this phenomena was brought in UAE. The reason is because UAE doesn't have personal income tax. Correct. It only has corporate income tax. Yeah. So under Article 36, connected person has been defined as shareholders of the company, which are individuals, not the corporates, and the directors and any officer. Now this officer definition is a little wider definition. One has to put their judgment to a right manner and understand who are these officers who are in a position to make critical decisions for the organization. Typically board of directors, or typically the senior officers, let's say the CEO, COO, the what we say, the executive suite or the C-suite. These employees or these directors and these shareholders in their capacity as an individual will be classified as connected person. Now, having said that, what does it mean? It means that the way you are dealing with them will be exactly the same way you are dealing with their related party, which means any transaction will have to be done at arm's length. Why? The question is why? Why? Because, as I mentioned, that personal income tax is still not in this country. So what a business can do? A business can transact with a shareholder and give the shareholder, let's say, a salary for running the business, which could be much higher than the market value or much higher than what generally another owner or another CEO had that individual third party CEO or managing the business would have drawn. Yeah. So what is happening by virtue of that? By virtue of that, what is happening is the profit is getting shifted from the entity to the shareholder. And that salary which has been paid to the shareholder will be claimed as an expense in the books of the company, and thereby reducing the profit and reducing the tax. Correct. At the same time, it will go tax free in the hands of the shareholder as a salary. To curb this particular thing, connected person definition or concept was brought in. In my view, it was a very intelligent way to make sure that the checks and balances are in place and the revenue leakage is not there to the system.
Yeah. Correct. So I think it is interesting, as you mentioned, it is the unique concept. Not everywhere you will have this, to consider the payments made to the connected persons and look at it as market value point of view.
True.
So that the revenue is not leaked from a tax point of view.
Yeah.
So just to discuss more on an important aspect relating to transfer pricing.
Yeah.
Can UAE entities with only domestic related party transactions be required to comply with TP? For example, most of the countries, the kind of transfer pricing related rules what they have is with respect to their cross-border transactions.
Correct.
If they have businesses in the country and they also have group entities outside the country, if they are doing any transactions with those outside country businesses, there your transfer pricing rules are applicable to a large extent.
Correct.
But whereas the question is that if you have businesses within UAE and if you are doing any transactions with those businesses or among the businesses, are you still expected to comply with transfer pricing rules?
Yes, Balram. The answer is yes. You have to comply. Yes, as you mentioned rightly, that in some of the jurisdictions, the international transactions or the cross-border transactions are more looked at. But in the UAE, as we mentioned, there are, in my opinion, there are 2 or 3 important points which perhaps led to this kind of decision. One is UAE has got 2 tax rates, not 1 tax rate. It has got a 0% tax rate for
Yes.
especially the QFZPs and the free zone persons, and it has got a 9% tax rate, which is for all other businesses. So, having said that, that brings a clear requirement of transactions which are being domestically done to be at arm's length. Otherwise, there can be straight revenue leakage or there can be straight tax evasion, which obviously the FTA wouldn't want. Second thing, in my view, as per my experience, I think it is possible that the domestic transactions for initial 5 or 7 years they may continue, and then gradually there can be a threshold or there can be a higher threshold below which the domestic transactions could be avoided for a arm's length principle. However, looking at the OECD standards, in my view, whether the transactions are within the domestic range or they are in the international range, there is a concept of consistency, and that has been brought here by the FTA, that consistently, whether you have an international transaction or domestic transaction, just do the transfer pricing and accordingly account for it. So I think these are the broadly the requirements or conditions, I would say, which compels right now or which has created this requirement of domestic transactions being at arm's length and transfer pricing requirements to be dealt with. However, let me just tell you that for the reporting requirements under the disclosure forms for transfer pricing as per Article 55, which has been mandated in the transfer pricing guide and the ministerial decisions, relevant ministerial decision, it has been spelled out that the transfer pricing disclosure form need not be filled in for the transactions which are within the same tax rate entities, which is, let's say, there are 2 mainland entities, both are taxed at 9%.
Tax neutral transactions.
Tax neutral transactions. Arm's length is still to be done. There is no respite there.
Right.
And that is very important for the viewers and for the audience and for the business to understand that it's only the disclosure requirements which has been waived off. It is not the arm's length principle or arm's length. The transaction has to be still benchmarked and still looked at from the arm's length perspective and treated accordingly.
Correct.
There are a lot of myths which are circulating in the market where businesses are under the impression that if the disclosure requirements are not there, there is no need to do arm's length. However, that is not the case. If the businesses are doing such practices, then definitely they are attracting penalties.
Right. So I think it is very, very clear that if you have transactions with any of your group entity which is outside,
Yeah.
you're doing any cross-border transactions with related parties,
Yes.
it requires compliance from TP, as well as if you have transactions with local entities domestically and the transactions are at tax neutral or not tax neutral, there also you have to follow arm's length pricing as well as comply with the transfer pricing requirements.
Absolutely. The
Let
respite is only, as I said, about the disclosure requirements and not about the arm's length test.
Let me just bring up one more area which may have some kind of arguments. Right. So if the entities are related parties and they are falling within the same tax group,
Yeah.
and if these 2 entities in the tax group are doing transactions, are having related party transactions, do we still need to follow transfer pricing rules requirement?
Yeah, I mean, this is a point, or this is a point which has been under a lot of debate
Yeah.
under a lot of arguments where the industry, I would say, or the entire tax practice has got divergent views.
Different opinions.
Yes, they have got different opinion. Some consultants or some tax practitioners and tax professionals stick to one view, which is there is no need to do the arm's length test and transfer pricing. And there are a bunch of other consultants and other tax practitioners and professionals who think otherwise.
Yeah. But at the end of the day, we know that there is no right and wrong or wrong
Correct.
answer to it.
Correct.
It all depends upon the facts of the case also.
Correct.
And what is the plan that you have
Absolutely.
before and after forming the task?
Yes, absolutely. I think the most important thing here is to see the long-term view rather than a very short-term view.
Yeah.
See, I mean, today you have a tax group, you have got group entities. Tomorrow, let's say 2 years down the line, you want to hive off one of the subsidiary. Then what do? If those balances are not settled, then those balances will have to be looked at from an arm's length principle, and then you will not be in a position to go and change your transactions 2 years, before.
Yeah.
So that is where I guess it is more pragmatic to have the transactions done at arm's length, and benchmarkings or whatever transfer pricing requirements are there, we should definitely fulfill, whether they are group entities or group transactions getting even nullified.
Yeah.
Why, I'll tell you. One is, as I mentioned, maybe in the future you hive off one of the subsidiary, you want to sell one business, you want to buy one business. It could be multiple options. Second thing, as I was mentioning earlier, it is about consistency. Now, let's say you have a group and you also have entities outside the group. So if you are transacting with the outside group entities at a particular price, you cannot transact with your group entities at a different price. Otherwise, you will always have a question whether transfer pricing was followed here or not here. So in order to make that consistent environment and to have that right practice, I think it's recommended to have the transfer pricing requirements fulfilled even for the nullifying transactions.
So it is a best practice that you can follow.
One is that,
if someone is interested in following best practice and have the compliance in place by considering the long-term objective in place.
Correct.
One should follow and make sure that they are at arm's length.
Precisely.
And the requirements of transfer pricing rules are complied
Absolutely.
with.
This is what I would feel.
You're right. Important. I think it is interesting to look at that. Other thing is that in addition to corporate tax rate and filing, with respect to the transfer pricing rules, what are the other compliances that one should look at? What else do you have to do in addition to corporate tax that you file? So as a business, if you are having transactions with related parties and connected persons. So one, as you know, you have to file TP disclosure form, plus local file, master file and all those things.
Yes,
When
yes,
are
yes.
these additional documentation, CBCR and all are relevant to be maintained?
Sure.
And when are you expected to do? Do you have any thresholds
Yes,
and all those
yes.
thresholds?
Yeah.
Let us just discuss about that.
Certainly. Those have been clearly spelled out in the ministerial decision.
Yeah.
A local file and a master file requirements are clearly spelled out, and the disclosure form thresholds also recently came in. So the local file and master file would be definitely applied in two conditions. One is if the entity is part of the MNE. Whether, again, let me be very specific on this. So when we talk about a MNE, which means their global revenue is more than 3.14 billion or 750 million euro.
Yeah.
So if on a global basis, the entity or the group has that kind of turnover, then any component or any even small component which is in the UAE, whether their revenue or the UAE entity's revenue or the UAE component's revenue is even, let's say, 100,000 or 200,000 or 500,000 or even whatever the number, there's no threshold. They have to definitely follow and maintain the local file and master file, and also file it accordingly as and when required.
Yeah.
One is that. Second thing is, if locally your annual turnover is revenue, if your annual revenue is 200 million plus, and it is not with the related party, but overall your revenue is more than 200 million or 200 million and above, then you have to maintain the local file and, if required, a master file as well.
Correct.
This is the requirement from a transfer pricing disclosure from a local file and master file perspective.
Yes.
The thresholds for the disclosure forms are clearly mentioned, that if all the related party transactions are more than 40 million overall, then every related party If it is above 4 million, then you have to disclose them accordingly and separately. This is for the related parties.
Every related party transaction or category of transactions together, if it is more than 4 million dirhams,
Yes.
that will go into your TP disclosure form.
Precisely.
Yeah.
And for the connected person schedule, which has to be filled in, if the transaction with that connected person is more than 500,000, then you need to specifically mention all the details about the transaction with that connected person and disclose it accordingly.
Yeah, connected persons along with the relatives of that particular connected persons.
Yes. Yes.
Together, if it is
Together, if it is more than 500,000.
then you are expected to report as part of your TP disclosure form.
True.
I think absolutely important one and relevant to look at. And are there any instances where the TP requirements are not required to be complied with? Do we have any instances or businesses which are having this exemption from TP compliance?
Yeah, it's only the small business relief and mainly the SBR. If you are claiming SBR, then the disclosure requirements are not there. However, as I mentioned, the arm's length test will still be needed. So the arm's length test, in my view, there is no respite to anyone. All the businesses, whether they are whatever nature they are, all the business types, they have to follow the arm's length principle and do the relevant benchmarking requirements for the related party transactions or connected person transaction. However, in terms of reporting, yes, for the entities claiming SBR, small business relief, they need not report the transactions.
Great. I think we pretty much covered what is required or expected to be covered or required to be reported under transfer pricing rules of UAE Corporate Tax Law. So, if I have to summarize this,
Yes.
so the taxpayers definitely need to identify what kind of transactions do they have in business which fall under this transfer pricing rules compliance.
Correct.
When we review the business or the books of accounts of the businesses, we come across a lot of transactions which are not identified by businesses which require this compliance.
Correct.
They may or may not realize that it has to be at arm's length. For example, most common area where we find out is the cost allocation, right? The employees of one company may work for other company or provide service for other company or the group entity or related party, but you may not charge or allocate this cost to that other entity. The management of the company or a group is sitting in one company or at group level, but they are providing services to various organizations or entities in the group. This cost may or may not be allocated to the respective entities based on the time that they spend or value that they create into other companies. So, and you may have transactions where the group is supporting in terms of funding to the entities of the group, but you're not charging any interest on that.
True.
So these are the kind of transactions and arrangements where one is expected to look at and comply with transfer pricing rules, but you're not even identifying them to be looked at. So at the end of the day, if you don't identify and follow these rules, it is a non-compliance from UAE tax law.
Absolutely.
Right. So the allocation, the funding support, top management support to various organizations, of course, transactions with related parties in terms of selling, buying goods, providing services, all those are anyways required to be complied with from TP standpoint. And additionally, the payments to connected persons, not just the salaries, but salaries, you may call it as remuneration, you may provide a vehicle,
Any emolument,
any rent or accommodation that you provide to this connected persons, or you call in whatever way you want to, as long as this is shown as expenditure in the books of accounts in your P&L, that requires to be considered as a payment to connected persons and make sure that that is at market value.
Absolutely.
So these are the various areas that most of the businesses are ignorant of about, or they may not realize that that has to be identified and complied with from TP standpoint. So this is one of the crux or the summary that I have to put across to businesses to look at this.
Absolutely. No, absolutely. This is very important, and this is where I was trying to explain that the related party definition is there, but the way financials under IFRS are prepared is little different or the way transactions are captured in the IFRS sometimes in this part of the world is little different, and it is not 100% covered or captured. As you
Yeah,
mentioned, from our
correct,
experience,
correct.
we have seen that.
In fact, the definition as per IFRS for related parties is not as wider as we have in transfer pricing.
Absolutely, absolutely. And this is one of the reasons. But what I'm trying to say is that even based out of general practice also, there are many transactions with the related parties also which are not captured in the relevant schedules. We have seen that.
Yeah.
So your starting point could be the related party schedule, but it is not the end.
Correct.
You have to dig in. You have to understand the kind of transactions which are being done. So the taxpayer has to really look at as you mentioned, every transaction with the related party or with the connected person, and then ensure that those are being captured. They may not be today accounted for or disclosed in the relevant schedule. They could be accounted, but they may not be disclosed in the relevant schedule. So it is very important to identify them from different places and put them in one place, and then accordingly deal with it.
Right. And one more challenge that I generally come across is that, as you know, the local UAE business families, they are generally large.
Yes.
So far it was not mandatory for you to identify the
Kinship.
owners, connected persons,
Yeah.
and their relatives.
Correct.
So if you have to identify their relatives and make sure that any transaction that you do with or without knowing, right? So they may, if you are a business organization with a large business transactions or businesses that you have, any related party, any connected persons out of this big list of your connected persons may go and do some business.
True.
May buy something from your group entity, right? So you need to identify those relations and make sure that those transactions that are done knowingly or unknowingly are captured and then reported if you are meeting or crossing the thresholds.
Correct.
This also becomes a challenging thing for a larger entities where your ownership is predominantly UAE nationals.
Yeah.
This is also one of the important area to look at, a challenging area to consider for.
I think the chart of accounts has to be really revamped, and these particular expenditure or income, whatever the case may be, has to be really dealt with in that manner and accounted or grouped in that particular division.
Right. So I think, yes, this is one of the gray area where a lot of businesses have to look at, focus, identify the transactions and make sure that they are complying with the requirements of the law.
Totally.
Thank you very much for that.
Thank you.